Hello, everyone. Good morning from this part of the world. And depending on what time zone you're tuning in from, I want to wish you a good afternoon and good evening. First of all, we coming in about an hour later than expected. Please pardon me on that one. We are exactly 10:39 a.m. local time. That's about 9:39 a.m. UTC. And basically, the reason why this is simply because I and the family are going on a journey at the moment, and we've been trying to prepare for this journey since yesterday night. And in fact, it took most of my day, and I wasn't able to even look at the market through the later part of yesterday stroke this morning. But thank goodness we are here. And of course, this session is going to be a little bit different than the previous one, as I will be as brief as possible, as we have a train to catch in about an hour or so. So we still need to do some packing and preparation. So I just had to do this session considering the fact that we are heading into an important day, a day which involves the NFP. And of course, it's important that since we've been monitoring these three financial instruments, it's important that we keep tabs with what is likely going to be happening today, and of course, what technical structures are on the chart, giving us an insight into the current sentiment, which is exactly what we are going to be doing today. So please pardon me if I be a little bit too fast, but I'll try as much as possible to be comprehensive enough. So once again, you are all welcome on board, and feel free to engage in the comment section. So with that said here, let's dive right into the charts, and let's dive right into the US dollar market dynamic. Of course, before we touch on the US All Spot, the USDJPY, and of course the gold today, we must first understand what the US dollar is doing, because of course we all know it's the engine that will be driving all of this instrument, especially today being the last trading day of the week. Now, why is the US dollar the center stage today? Well, of course, we are looking forward to a big event, that is the US non-farm payroll. And if we look at the economic calendar here, it is coming in by 12:30 p.m. UTC. That's about 1:30 p.m. Local time, and the market is holding its breath for the NFP job report, as you will see across the chart that the market has been going through a consolidation phase to further emphasize how important this event is. So major key players are must have aside from the market, waiting for the data to come in before making aggressive bets. And if you look at the chart, that is the DXY, as you can see on my screen, you can see the market has been going through a consolidation since the beginning of the week, after dropping below that $99 level, a level which we identified in the last couple of weeks as a robust demand zone in this market. So we saw price broke down the structure, and it keeps coming back into that $99 area. As you can see, market know that the next big wave of momentum is going to be coming in from this area. And the NFP can be considered to be the single most important economic data this week, and it could change everything, especially the Fed policy expectations. Then if we look at the economic calendar, we saw that there has been signs of a cooling US job market through the course of the week. So this week we saw something like the ADP and the jobless claim counts. So when was this? On Wednesday, June 4th, coming in way below what market participants had expected. In fact, it was even lower than the previous month. So if you look at the data here, it came in at a woeful 37,000 as against the previous month, which was 60,000. And of course, the market were actually expecting 115,000. So it's not a very, very good report at all. Then besides this, we also saw the initial jobless claim count coming in yesterday at a woeful 204, expectation of 235, and the previous month, which came in at 239. So what this data here tells us, it gives us an insight into how many people are filing in for job insurances. So this tells us that there's been a lot of people in the US economic market space that are looking for job, which further shows that the data is not doing, the labor sector is not doing very well. And if NFP also, this is a labor oriented data, and the NFP is also considered to be a labor oriented data, and of course this is likely giving us an insight into what we might see from the NFP today. And if NFP also comes in soft, traders will like interest rates soon, which definitely will weaken the US dollar. But if there is any form of surprises today, that is the NFP comes in stronger than expected, it could revive the US dollar strength by pushing rate cut expectation further out, giving the US dollar short-term power. Now let's look at what market participants are expecting from the NFP today in comparison to the previous month data. So if you look at the NFP, which is right here, 12:30 p.m. UTC, the previous month showed that the US government added 177,000 for the month of April. Now, for the month of May, expectations are that the number has reduced, that the jobs that will have been added will be 130,000. So we look forward to see what the actual data is going to be. Will it be just as market had expected, below expectations, or even beyond expectations? So at this moment, traders are staying very cautious, adjusting positions across all markets. The gold, we'll see the same thing happening in the gold market, the oil market, the yen market, and of course the stocks market as well, based on what they think NFP might reveal today. And this is more of a consolidation ahead of this event. So now with this information we have gathered here from the US dollar economic landscape or market landscape, what are the chances that we are looking forward to in the USD JPY and of course the gold commodities? So the first asset we're going to be taking on this morning will be the USOILSPOT. And of course, on the USOILSPOT, we begin to notice how the $63 area had continued to be a strong resistant line in this market. Remember, we did identify that structure at the beginning of the week after capturing the character of price action throughout the month of May. And you can see every time buyers try to break out of that structure, it has always been met with strong resistance from the sellers, pushing price to the downside. Then to further emphasize the strength of the sellers, you'll see here we had a descending trend line, remember? And of course, throughout the course of this week, continue to oscillate around that descending trend line. So let me zoom in so we can see. So that's the descending trend line here. The market has been throughout the course of the week, though we had some opportunity to buy at some point in time, but price keeps snapping back into the entry point. So how do we intend to prepare for today's trading session after considering the fundamental factor? So as it is, oil has been, and I think will be, until the NFP moves sideways, as traders with US job report will say, and hope for a smoother US-China trade relations. So these are the major factors that will be influencing the sentiment around this market. Now, the sentiment at the moment is looking a little bit positive, considering that US-China trade talks, President Trump and President Xi had a conversation, had a phone call yesterday, and there was a positivity around the phone call, which may ease trade tension, and this is good for oil because better trade means more economic activity, especially from China, which is considered the biggest oil buyer. Then besides this is the expectations of a dovish Fed. That is, if the NFP comes in weaker, as market are looking forward to a weaker report today. So if today's NFP shows weaker hiring for the previous month, the market will expect the Fed to cut interest rates sooner, and lower rates, you know what that means. It means weakness in the US dollar, and usually will push oil prices up because the demand for oil will increase as majority of the currency holders will find the US dollar very cheap enough to convert to, so that they can buy the oil, and all the demand for oil will rise, and of course what happened, price will definitely things are looking rosy for buyers in this market. However, in as much as this is the case, traders will continue to be in a wait and see approach as oil is stuck around this particular area because investors are waiting for the US job report. So we are likely going to be seeing some extended sideways trading activities, and this is further clarified on the lower time frame. So while trying to identify an area to capture the next move this morning, this was what I was able to come up with on the 15-minute time frame. So let's go into this 15 minutes time frame to see what I am expecting. So looking at the chart here, the first thing I notice is the downtrend scenario that gripped this market yesterday after price action tested, or maybe let me say did a little bit of breakout of the $63 area. And of course you can see how it had become difficult for buyers to maintain momentum above that structure. And connecting the series of lower highs here, we have a beautiful descending trend line to work with for today. Now you know how we use our descending trend lines. Of course, as long as price remains below the descending trend line, we'll continue to look out for patterns and structures that support selling ideas. But if this descending trend line is breached and broken to the upside, we may likely see an uptrend continuation, which will be further supported by the positive US-China talks and the expectations of a dovish Fed outlook if the NFP comes in weaker than expected. So with this trend line here, I was able to notice that that area between the $62.50 level and the $62.25 area had continued to be a very important zone in the last 24 hours. In fact, this zone had been the platform that sent price to break out of that $63 area. That was yesterday morning, and you can see price is back into that zone around the $62.50 and the $62.25 area. Now, will it be a demand zone again, just like it did yesterday morning, to incite an uptrend move? So as a result of this, I am looking forward to price breaking out, retesting the trend line and the $62.50 level to feel comfortable buying this particular asset. Now, if you look at the bottom of your screen, you will see that I already have two positions running on the US Oil Spot. I had a sell at some point, and then I had a buy this morning. So I've moved my stop losses accordingly. So whichever case plays out, but it looks as if buyers are likely going to be taking over this market, as the inability of sellers to break through the $62.25 level is a sign that major key players in the market know something that we do not know and may likely push price to the upside. So I already placed my stop loss on the sell position. If it gets taken out, I can afford to risk that, but I'm leaning strongly towards the bullish perspective, at least in the meantime. So if you want to be part of this move with me, placing a buy stop order above the $62.50 level is looking very promising. Place a buy stop order above the structure, and of course have your stop loss. I want to have a wide range of stop loss because of the volatility that is expected ahead of the NFP, and of course we do want to be giving enough breathing space for price action to move around. So stop losses will be between 25 to 35 pips of stop loss, just for us to have enough cushion to capture any form of consolidation before price action finally takes the big move. All right. Now, if we are going to be selling, considering the fact that price is below the descending trend line from a technical standpoint, from a fundamental perspective, the market is a little bit dicey at the moment as they wait for the NFP report. I would like to see a breakdown of the $62.25 level. A breakdown here will mean that sellers are finally taking out, or let me say the buy positions around this area have finally been taken out. And then we have a breakdown, then price comes back to retest for liquidity sake to incite a push to the downside. So that will likely confirm a sell for me if that is going to be the case. So this is what I'm looking at on the US All Spot for today. Strongly from a deeper part of me, push momentum on the US All Spot, and if the opposite happens, of course we shall be ready to be part of that move also to the downside. So I encourage us all to mark out these levels, as we are going to be needing them as a reference point to help us navigate this market today. If you have any questions whatsoever, feel free to let me know in the comment section. I will not be taking a break today, as I'm very much in a hurry. So if you have questions, I will keep looking at the comment section and attend to you accordingly. So let's move on to the next asset on our watch list. So the next asset I'm going to be looking at this morning is the USDJPY, and of course we will be delving straight into the 15 minutes time frame, where that will help us navigate this market today. And at the moment, the Japanese yen in the last 24 to 36 hours has been going through some weakening because Japan's economy is showing signs of stress, while traders are waiting to see what the report is going to say about interest rates to decide what to do next. And of course, if you look at this chart here in the last 24 hours, right here on the 15 minutes time frame, the market had continued to find a series of higher lows here, giving us this beautiful ascending trend line ahead of today's trading session. So what this simply tells us in the last 24 hours is that the US dollar is gaining traction, and one of the things that could be that has been influencing this traction is the we had weak economic data from the Japanese economic docket in the last 2 to 3 days. I think they are on the, let me change this filter to let me change it to the low impactful event. I think we have some low impactful event. So let's see. It's taking some time. Okay, so for instance, I'm looking at, okay, so for instance, we look at the household spending in the Japanese economic docket. It unexpectedly fell to a deficit of 0.1%, which was way below the market expectations and of course the previous month data, as you can see. And wages are still not keeping up with inflation at this point, and that's a bad sign for Japan's economy and reduces investors' confidence in the yen, at least in the meantime. And of course, the positive sentiment US-China trade progress reduces demand for safe haven currency that bolster the US dollar, as traders are shifting into the US dollar ahead of the NFP jobs report, boosting the dollar at the same time and weighing on the yen in a temporarily at the moment. So what I'm thinking right now on the chart is that we may likely be seeing the dollar rise a little bit. A lot of people are taking advantage of a weaker US dollar, buying the US dollar very NFP. They start selling back again, then the dollar will drop to the downside. So that is what I'm thinking is likely happening around this area, which usually happens on the last trading day of every week. And if we consider today being an important day where everyone is in a particular way sticking to a particular bias at the moment, so I do want to wait for some confirmations to happen before I jump into a position on this asset. And to help me understand the sentiment in this market, I have a structure already in place. So you can see the market has been confined within a range bound structure since today's trading session began. That is between the 144.145 and the 143.900 to further emphasize the prevailing uncertainty ahead of today's NFP. And you know how we treat our range bound structure whenever we identify them. We do want to exercise patience, wait for price to give us a signal or a clue that it is going in. And of course, the signal that we are looking forward to is either price breaks out, retests the 144.145, which of course shows that price still remains above the ascending trend line to support an uptrend continuation. However, if that ascending trend line is breached and broken to the downside, well, a breakdown of the 143.900 will be all we need to continue to the downside. So you can see we are at a crucial juncture at this point. So let's see how the market will play out here. I think we've had a small breakout of structure around the 144.145, but price is back again below that particular area. The impatient side of me is saying that I can afford to risk placing a buy stop order above the 144.145. Hopefully, if price maybe move like 20 pips, 15 pips there, I'll just move my stop losses to break even and see what happens from there. Now, if price action does the opposite and it continues to drop to the downside, well, I would like to see a breakdown retest of the ascending trend line. Then if that is going to be the case, I will place a sell stop order below the 143.900 areas. Hopefully I will be able to drop some updates in the comment section. Of course, if we look at the structure, you will see gold has been holding steady as market participants wait for the US NFP report to decide if the Fed will cut interest rate or not. And this has led into this choppy conditions around this area. And of course, the last 24 hours review, the last 12 hours of feels that the gold market is doing some sort of recovery. As you can see, we have an ascending trend line, though the ascending trend line appeared to be broken as you hear during the early hours of today. It came to do some sort of retest of structure, as you will see here. Now, one thing that made me feel comfortable buying the gold despite the breakdown of that ascending trend line is the character of the candlesticks around the three. If you look at the character of the candles here, you would notice that most of them closed in the form of an hammer candle, which is theoretically speaking a very strong sign that buyers are still present in this market. Now look at this one here, the last 16 minutes or so. You can see we saw a hammer candle spring out from that particular area, and of course this is making me feel that we are within a formidable support line that could send price going to the upside. So basically, because of this, I placed a buy position, and of course it is running in a loss at the moment. My stop loss is somewhere way below the 3,000. dollar area. So I want to give enough room for any form of volatility that will happen today, because it is expected here, and I think I can afford to risk that based on the position sizing I have for the gold commodity. Now, with the way things are going in this market, if you look at the fundamentals, the path of least resistance remains to the upside. We're talking about geopolitical tensions, that is the ongoing conflict between Russia and Ukraine. The unrest in the Middle East also makes investors nervous, which often increases the demand for safe haven assets such as gold. Then the expectation of Federal Reserve rate cut is also on the table, especially after a week of data from the United States, which further reinforces the idea that the Fed will cut interest rates anytime soon. And of course, Trump's unpredictability as regards to trade policy is also something that could favor the gold commodity at this point in time. So based on all of these facts here we have on the chart, I have placed a buy position, and I'm looking to add more at the breakout of the 3,365 level, and if price continues to go up, I will be updating us on where to buy. But most of the time we plan and the market tells us that he is the boss, right? And we may plan that we are going to the upside, and all of a sudden price will go to the downside. And of course we do have tendencies that the dollar could also, if the NFP comes in higher than expected, we could see a sporadic rise in the price of the US dollar. And of course, if that is going to be the case, the gold commodity may crash going into the weekend. And of course, this wait and see approach is also likely going to bring some form of fear into the market, and we know how strong the emotions of fear are. Now, if I am going to consider selling based on this understanding that are likely going to happen today, I want to be monitoring the character of price action support line at the 3,356 level. Now, I will not be jumping into a sell right away if price breaks down that structure, as it could turn out to be a false breakdown. Of course, we saw this happen earlier today. False breakdown happened here, which later turned out to be a hammer candle. We saw the same thing happen about 15 to 20 minutes ago. It turned out to be an hammer candle. So we'll need to see some significance that tells us that sellers are going to be taking charge. Now, what I'm going to be looking out for here is a significant breakdown of structure, maybe an engulfing bearish candle. That will be just for price to come back, retest the structure, giving me some confirmations that buyers are finding it difficult to climb back above the 3,356 level. Then I will join that downtrend scenario. So that is basically what I am going to be looking at here today, to see how to join a sell if a breakdown of the 3,356 level happens. But with that said, I'm still, something within me tells me that price is going to go to the upside this week, today, but I don't know when it's going to turn price around the 3,356 to see how it reacts to that level. And of course, if anything new comes up, I will be updating us on both my TradingView and Telegram platform. So at this moment, let's stay patient. Let's wait for the job US NFP data to see what happens. And of course, I wish us all the best of luck on the XAUUSD. So that is my simple view on this asset. If you have, feel free to let me know in the comment section. So I will take about 5-10 seconds off. Let's see if there are any questions before I finally round up on today's Forex Money Mastery. So with that said here, I guess we have come to the end of today's Forex Money Mastery. Sorry, pardon me for this brief session. Like I did mention, I'm traveling and I need to sort it out before we get to the journey. So that's why I just had to do this. It's a very important day, and of course I know we will be needing a structure to help us understand the current sentiment in the market, and of course use it to prepare for the next big move that is likely going to happen today. I have a strong feeling we don't know what direction it is, but we already have simple structures identified on all of this instrument, the USDJPY, the USOILSPOT, and of course we're going to be using to navigate the market today. And for those who are on our earlier discussions, you can actually watch the replay of the live session after the end of the session. So with that said, I guess we have come to the end of today's been a great moment with you guys, and I look forward to I look forward to a very, very good day for us all. I wish us all the best of luck, and if you're yet to subscribe to the channel, please do, as we are going to be doing the Forex market prep on Sundays in preparation for the new week. And of course, I will be seeing you all again on Monday during the Forex Money Mastery, and of course I will also be sharing with you my plans for the new week in terms of the XAUUSD, and maybe I'll share something on the USDJPY just to keep us abreast of what my plans are. So it's on this note, I would love to wish us all the best of luck today. Trade smart, trade consciously, and of course do have a wonderful evening and a beautiful bye.